In this video, I'll be running through the difference between margin and markup, how you can convert between them. We'll provide you with an easy converter calculator as well. This video is really important because most early stage e-commerce founders between $500K a year to even $3 to $4 million a year don't know the exact difference between margin and markup, and it causes a lot of confusion when these metrics are passed on to outside providers who are asking, what is the margin on this product? And a number is provided that isn't an actual reflection of the real margin. And so you might get, for example, our margin is 50%, but they're actually talking about a markup of 50%, not a gross margin of 50%, which means that all KPIs moving there forward are set up based on a wrong assumption. So it's really important to know the difference between these two. It's also really important that whoever you're talking to that's giving you a margin number knows what margin is. So margin is, the formula is your selling price minus your cost price divided by your selling price. And so you can see, for example, if we have a product that costs us $20, we're selling it for $100, the margin comes out at 80%. Another way to think through this percentage figure is that if we're to sell $100 in product or $1,000 or $1 million, 80% of that trickles down into gross margin. And so if we sell a $100 product, we get left off with 80. So you can almost visualize it as a funnel where margin is showing you how much you're losing as you're going down the funnel to ultimately EBITDA or net profit at the very bottom. Markup instead is not in relation to the trickle down of cash through the business, but is instead in relation to how much are we marking up the product from the cost price. And so the key difference between the formula here is that this stays the exact same, the top side, and then the denominator changes to cost price. And so instead of dividing by selling price, we're dividing by cost price. So exact same example, $100 product, $20 cost, it's $80. And when we minus these two, $20 4x. And so we're marking the product up. Now this might seem fairly obvious, but even markup, everyone calculates this differently. And so even with markup, you need to understand how they're actually coming to that figure. Now, why do I say that? Because most people don't do the top end of this formula. The actual way to calculate markup is the cost price in relation to the profit made on selling the product. And so when we sell this product, we're making $80 in profit. We're dividing that by the $20 cost. And so we have a 4x markup. But if you think conventionally about markup, let's say you're selling a $100 product, you buy it for $50, you would think, well, we're marking that up by 2x, right? Because we're buying it for $50, we're doubling it to $100, and that's our price. And it's called keystone pricing. The issue is that is not the correct definition of markup. Markup does not relate to the actual sale price of the product. It instead relates to the selling price minus the cost price. And so this is once again where you'll get into instances where people will say that they have a 4x markup. And so you're then going to take that number, convert it into gross margin, which I'm going to show you how to do in a moment, and then assume a gross margin figure that's actually wrong. And so even when you're asking people for markup, you want to know how they're calculating it. You honestly want the actual cost price of the product, and then you can go get the selling price yourself and run the math yourself. Because margin calculations being wrong can destroy the profitability of a business, because you will overspend on marketing, not realizing that that margin doesn't exist within the business, and all free cash flow will disappear. And so the key difference between these two is just the denominator within the equation. And so we're taking selling price minus cost price. That's always going to be the case, whether you're calculating markup or margin. Core difference here is what you're dividing that number by. In markup, it's cost price. In margin, it's selling price. And so that's the key difference. Now, a really common mistake in markup, other than the one I just mentioned, which is the number one common mistake. Number two is that they're doing it just based on the cost price of the product, and there's no inclusion of shipping and fulfillment fees and transaction fees to actually execute that order. And so what ends up happening in a lot of cases is that brands will say, yes, we have a 2x markup, and you will go and back that into a gross margin calculation, use that and say, well, this is the gross margin that they're making, so we can spend this much on ads, we're profitable at this CAC. But it has no inclusion of transaction fees, which on low average order value stores can actually be quite significant, because that 30% add-on actually makes it 5 to 6% in some cases. And then number two is shipping and fulfillment can take anywhere from 5 to 20% of revenue. And so your cost of goods or your markup essentially halves. And so it's really important to understand the difference here. Now, to show you the formula to be able to move between these two, if you've been given a markup number and you're sure that it's been calculated correctly with selling price minus cost price divided by cost price, to convert to margin, you take the markup divided by 1 plus the markup, and that will convert you into margin. So it's as simple as that. You can just go and put this together yourself to be able to easily translate between these two. And then to go back in the opposite direction, so if you're provided with margin and you want to go to markup, you use the exact same formula, but you switch this plus out for a minus. And so down here, you can see I've just done that. And so we're doing margin divided by 1 minus margin rather than plus. And this will take you into markup. And so we can go and change this, and this will show you what the markup is in conjunction. If you don't want to go and set this Excel sheet up yourself, feel free to reach out to us. We'll just give this to you for free. And then lastly, we're collaborating with Store Hero to put together a live webinar on February 13th, Melbourne, Australia time, February 12th, if you're on EST or GMT. I'll put a link to register to this webinar in the description below. What we'll be going through is understanding contribution margin, how to know if you're first order profitable, gross profit based LTV, and how to calculate that cohort, aligning contribution margin with meta-ag KPIs, how poor account structure hurts your LTCM to CAC ratio, which I'll be diving into, daily decision-making for better financial outcomes within the platform, and structuring for profitability, not for ROAS. I'll be giving a lot away in this webinar that I've never spoken about on the YouTube channel before, so I would strongly recommend clicking the link below and signing up.